Mortgage rates in the United States have dropped again. That's 2 weeks in a row. Not only 2 weeks in a row have they dropped, but 2 weeks in a row they have hit year-to-date lows. Last week, 3.86 on a 30-year mortgage. This week, 3.82%. The United States is doing really well. There's a whole lot of lending already going on, and at these rates, it's pretty tough to actually pass up probably purchasing a house if you found yourself financially stable, especially if you went through all that recession nonsense. You know, you probably came out of that either with a bad taste in your mouth because maybe you had to pare yourself back a little bit from what you were doing, or it put a lot of what you were working towards on hold. The United States finally has a lot of good jobs out there. The unemployment rate is very low. Now, these mortgage rates are going to continue to go up year over year. Let's not kid ourselves. As long as things stay okay, they're going to continue to rise. Now, people in the mortgage industry, they already know that things are doing really well, because when we compare last year's number for this exact week, it was actually 3.46 for the 30-year. So while it's hit year-to-date lows 2 weeks in a row, we've actually seen a fairly decent bump up in price year over year. If you're out there and you're sitting on some money and purchasing a property is something that you've been looking forward to, it might be something that you might want to actively start pursuing. Now, you really want to take a look at the marketplace that you're buying in and the way that the prices have changed recently. Any kind of inflationary stuff is fine, but I mean, if prices have gone off the board, I'm not entirely sure if that might be your best bet. Again, your licensed professional financial advisor is going to be the one that's going to be able to help you the most. And that's the person you should be consulting with. But when mortgage rates are doing really well like this, and the economy is, and you know that lenders are also out there with maybe some relaxed, and please don't leverage yourself if you can't handle it, especially in the future. Think of what could happen, not what's going on right now. Bad things could potentially happen. Do you have a safety net to be able to back you up in case those things do happen? Think those things through, but when you see opportunities like this, economy doing well, mortgage rates low, and lending practices being fairly lenient and fairly robust lending out there, if purchasing a house was something that you were looking forward to, consult your licensed professional financial advisor. This might be one of the more opportune times you're going to get.